Hello and welcome to Money Matters. I am Folashade Ogurinde. With the early passage of the 2020 Appropriation Bill in December 2019, government was up and ready to boost the economy through capital projects and revamp both public and private sectors through strategic policies. However, things took a downturn with the discovery of COVID-19, a fast-spreading killer virus whose preventive measures of restrictions and lockdowns struck a huge blow on both local and global economies, especially for tourism and aviation sector, as well as other businesses that rely on human interaction. With a drop in global oil prices coupled with recession, Nigeria's rising debt profile, steady inflation hike, fall in the value of the naira, and ripple effects of COVID-19 on key sectors of the economy has become pertinent to revisit economic and financial mistakes made in 2020, as well as explore prospects for Nigeria in 2021. Joining me to discuss this is the CEO of Cowrie Asset Management Limited, Johnson Chukwu. Thank you for joining us on Money Matters.
Good day.
A good day to you too. First of all, how would you appraise Nigeria's economic performance for 2020 on the backdrop of unexpected COVID-19 pandemic and its effects it had on the economy?
On average, I would say that the Nigerian economy performed poorly in 2020. Of course, we knew, like you rightly said, the COVID-19 had a very unexpected impact on the global economy, not just the Nigerian economy. We saw the global economy go into recession. Nigeria was not an exception, or a positive exception, because a few countries were able to avoid recession, but Nigeria was not among them. Nigeria economy in the second quarter of this year contracted by 6.1% and further contracted by 3.62% in the third quarter. Prior to that, the first quarter, which had minimal effect of COVID, the economy only grew by 1.87%. And for me, that's the measure of how the economy fared. We need to look at the economy before COVID, because subsequent to COVID, a lot of headwinds that came from the COVID impacted on the economy. But if you consider the first quarter of this year, the economy only grew by 1.87%. That's a measure of how weak the economy was before COVID-19. So it was a bad situation that was exacerbated by COVID that led to an economic recession that we're currently witnessing.
Now, to revamp the economy, policies were implemented. We have CBN's policy on diaspora remittances, monetary policy rates, the land border reopening, the finance bill, the World Bank loan, among others. Now, in retrospect, what economic policy of the federal government do you think did lead to revive the economy?
Of course, in the first place, the economy has not revived. We are still work in progress. A lot of the policies you just mentioned. Let me take, for instance, the CBN policies on diaspora remittances. It was designed to address the shortfall in supply to the parallel market. What the central bank wants to do is to push dollar liquidity into the parallel market and reduce the spread between the official market rate and the parallel market rate, which hopefully, when the economy picks up and global remittances resume, because global remittances have not still fully resumed. Recall that a lot of Nigerians who work outside the country, who send monies home, had their jobs for long. Many of them lost their jobs. Those who did not lose their job outrightly were for long on their jobs. And therefore, their income level couldn't have been the same as they had in 2019, when total remittance was about $23.5 billion. I mean, homeward bound remittances or domestic diaspora remittances were about $23.5 billion last year. So that was nothing. There was nothing that happened this year that could compare to that. So hopefully, by the time the global economy is stabilized with the discovery of a vaccine and remittances resume, we should see liquidity flow into the parallel market and reduce the spread. And hopefully, that will help stabilize the exchange rate and moderate the current pressure we have on the exchange rate. Then, if you look at the other policies, the issue of border reopening, I mean, that was too late in coming. In the first place, the objective of the border closure were obviously not achieved. The federal government closed the border on the basis that it will stop the inflow of small arms that we are aiding terrorist activities and insecurity in the country. But unfortunately, that worsened in the 14 months or 15 months of the border closure. We saw a worsening of insecurity in the country. which meant that did not have so much impact. On the economic side, we saw an uptick in inflation from the period the border was closed in August 2019. We began to see immediately, we began to see an upswing in an upward move in inflation. Today, they say that by the November figure, the inflation rate was about 14.89%, from just about 11% at the time the border was closed. So on the positives, one could say that we've seen an expansion in rice production. We've seen an increase in local consumption of rice, but we've not met the demand for local production, local demand for rice. So we still have a gap between demand and supply of major staple food, including rice. But on the balance, I would say the policies that the government has implemented since COVID, in response to COVID, the one I would say is the most positive as far as I'm concerned is the fact that the federal government had decided they will no longer continue to subsidize the refined petroleum products, that is fuel, which for me will conserve foreign exchange, stimulate local refineries, and then help to a long-term conservation of foreign reserves. That for me is the most pronounced of the policy the government has taken since COVID-19.
Now let's talk about prospects for 2021. Now, currently, global oil prices are picking up. The International Monetary Fund, IMF, ranked Nigeria as #1 in Africa on its World Economic Outlook. Again, COVID-19 vaccine is now available despite the new strain. Now, how do you see Nigeria's economy, planning out in 2021? Do you see us coming out of the recession in fourth quarter of 2021, just as the federal government has said? And what are your thoughts exactly on this?
My projection is that we'll come out of recession in second quarter, not first quarter. If we come out in first quarter, I'll be positively surprised. I will be pleasantly surprised. In terms of how the economy should look or will look in 2021, just like rightly pointed out, the world has found a vaccine for COVID. I'm hoping that by the end of the second quarter of next year, we should have those vaccines available to the most vulnerable in society. It will facilitate the resumption of travels, commercial activity will fully resume, and we're already seeing the positive impact of the discovery of these
COVID-19
vaccines on the economy. We've seen
yes, and Moderna.
Pfizer and Moderna. We've seen oil price move back to about $51 per barrel. We are already seeing OPEC Plus discussing increasing crude production so as to meet increasing demand. So I think we're going to see more stable crude price, improved demand for crude, and that will dovetail or trickle down into improved foreign exchange earning for the country, more stable exchange rate in the country, and therefore will lead to some moderation in inflation rate. So as it relates to economic growth rate, we know that part of, like I said earlier, part of the crisis we had in terms of the economy was induced by COVID-19. So I want to believe towards the end of next year, the impact of COVID-19 will significantly moderate, and we should see the economy go back to its normal, slow growth rate. Like I mentioned earlier, the economy grew by 1.87% in the first quarter of this year when there was no COVID in Nigeria as a country. So we hope that towards the end of next year, we'll go back to that growth rate. For me, the challenge is how do we stimulate faster economic growth rate? We need to grow the economy, go back to the growth rate of about 7.5% we used to have in the 90s. That is what will assure us of improved standard of living, and we take out more people out of unemployment and reduce the level of poverty.
Now, it's quite interesting that you mentioned growth in the 90s, because for most Nigerians, inflation always go up. There's usually not when the price of a commodity goes up, it never comes down. And of course, this has been a reoccurring issue in the Nigerian economy, and this has been the usual experience of most Nigerians. Now, what policy should the government put in place, or what shock could be put in place to ensure that 2021 doesn't become a worse year than what it is in 2020?
Well, in the first place, let me disabuse the mind of Nigerians the risk of the 2021 being a worse year, unless there is another natural calamity or political upheaval or social unrest. we should not expect 2021 to be worse than 2020 because 2020 was impacted by too many extraneous factors, COVID-19, NSAS, and now we have a second wave of COVID-19. But in terms of policy choices the government need to make, one of which is to pull back from subsidizing consumption, which I said earlier, the government is pulling back from subsidizing petroleum products. The next thing is to stimulate local production of some of the goods that we have competitive advantage. The Nigerian government has done that successfully in the past. We've seen Nigerian cement industry among the most buoyant in the country, in the continent, and we've seen Nigeria from a net importer of cement to a net exporter of cement. We can replicate that in several sectors of the economy where we have competitive advantage. For me, to drive economic growth, to stimulate the economy, we need to, as a country, look at those sectors we have competitive advantage and come up with policies that will encourage local investment as well as foreign investment in those sectors. Petrochemical industry, we have competitive advantage in that area. Pharmaceutical, if we have a strong petrochemical, we should have a strong pharmaceutical. Resin and plastic industries, we should have drawing from our petrochemical industries. Then agricultural beneficiation of agricultural products, we should by now be talking of improving the value chain of many of our agricultural products so that we do not just produce the raw material, we also process those raw materials into finished goods.
All right. Thank you very much, Mr. Chukwu, for sharing your thoughts with us on this matter.
My pleasure.
And that was Mr. Johnson Chukwu, the CEO of Kari Assets Limited. And we'll take a short break here, and when we return, we'll take a look at MSMEs in Nigeria and how they can thrive amid COVID-19 economic effects. Please stay with us. Welcome back. There is no doubt that micro, small and medium enterprises, MSMEs, are the bedrock of the development of any nation. MSMEs are crucial to any economy as they create an enabling platform for economic growth, which leads to job creation, revenue generation and economic diversification. According to the World Bank, MSMEs represent about 90% of businesses and more than 50% of employment worldwide. The latest MSME survey by the Nigerian Bureau of Statistics indicates that Nigeria's SMEs contribute nearly 50% of the country's GDP and account for over 80% of employment in the country. No doubt the sector is pivotal to Nigeria's growth, including reducing poverty levels. However, the sector continues to be weighed down with challenges which ultimately impacts the nation's growth. With the numerous economic challenges encountered in 2020, the need to inject fresh ideas have never been more urgent to ensure that small and medium-scale businesses survive the 2021 fiscal year. For a deeper analysis of this issue, I'm joined now by finance analyst Segun Sopiton, who joins me via Skype from Lagos. Welcome to Money Matters.
Thank you very much.
Now, it's no news that, very warm welcome to the program. Now, it's no news that 2020 has been a tough year for most businesses in Nigeria. But for MSMEs, how do you think they fared?
I think it's been, like you've said, all over the world, not just in Nigeria. Businesses have suffered. Pardon me. But the impact on MSMEs have been more severe, and the reason for that is not far-fetched. By definition, MSMEs are micro, small, and medium-scale enterprises, right? So, being small is an automatic disadvantage in situations like this, because what that does is your shock absorber, your ability to absorb shocks, let me put it that way, is significantly reduced by the fact that you are small in every regard, financially, in terms of cash flow, in terms of access to finance in emergency situations. You simply can't adapt. So when things like this happen, nobody saw the pandemic coming, nobody. So when things like this happen, the first casualties are usually the small businesses, the micro businesses, small enterprises. The larger ones, are the ones that get most of the attention from government in terms of palliative measures, fiscal support, and all of that. The larger ones are the ones that have access to the banking and finance sector to tide themselves through. The larger ones are the ones that have some sort of cash flow that they can dip into to take care of the impact of these types of disruptions. The small companies simply don't have those luxuries. So you find that a lot of them, in 2020, a lot of businesses have closed down. A lot of businesses have closed down, a lot of losses. People have lost money, people have lost investments that they've made over years just because this pandemic happened and nobody could really have prepared for it.
Now let's talk about the Finance Act of 2020, which has provided a fairly soft landing for SMEs whose performance might have been more impacted negatively in the face of the pandemic and recession. Now, what ways can SMEs leverage on the provisions made to further propel business performance and stay afloat in 2021?
Okay, it's an interesting issue to look at. And I say that because on the one hand, the Finance Act has quite a number of provisions and measures that significantly improve, that will significantly support their businesses in the coming year and as long as that act is in effect. But the challenge, and the reason I say it's interesting, is that those effects presume that you pay your taxes. And unfortunately, quite a large chunk of small businesses in Nigeria operate in the informal sector, and therefore are really, really not even in the tax-paying net in the first place. So that is a challenge in itself. For those that are in the tax net and can therefore take advantage of the Finance Act 2020, there are quite a number of provisions there that they need to pay attention to so that they can take full advantage of that come 2021. The very common and obvious ones are the reductions in the tax rate. So what the Finance Act has done now, in order to support the smallest, let me say the smallest of businesses, to ensure that some of the burdens that they struggle with is dealt with, is that the Finance Act has actually exempted a certain category from paying taxes at all. If one looks at some of the surveys that have been conducted either by the National Bureau of Statistics that you referred to earlier, or some of the professional bodies that operate in Nigeria, like PwC and the likes of them, you find that over about 22% of SMEs in Nigeria will tell you that one of the challenges that they face is dealing with the tax burden, right? So the Finance Act has helped with that, ensuring that if your turnover is less than 25 million naira per annum, you pay no taxes at all, zero. This is significant, and I think that it's extremely commendable on the part of government, because what that is supposed to achieve, or what that's supposed to do, is that it's supposed to bring people into the tax net. So when we talk about people in the informal sector, majority, an overwhelming majority of them fall within this category of less than 25 million naira in turnover, in sales per annum. To make that relatable to the average person who is probably not financially savvy, what we're basically saying is that if you're selling in your goods and services, if your sales in a month is less than 2 million naira, or is around 2 million naira, right, in a month, then your turnover per annum is less than 25 million, and you don't need to pay company income taxes at all. Now, this applies to whether you are running any kind of business, right? So the fear of paying taxes that people have and that drive them away from registering their businesses, whether with the CAC or with the tax authorities, has been taken care of, right? So I think that's a brilliant move from government. So it's an encouragement for everybody. Go get registered. Register your business so you can take advantage of this. Because what this means is that once you are registered and you are in the net, you are taking official advantage of this exemption, and you are therefore not liable in the event at some point in future that somebody comes after you to say, oh, all this business that you've been doing in the past, you've not been paying taxes on them and all of that. So that's one. For people within the category of between 25 million naira per annum to 100 million naira per annum in turnover, the tax requirement for them has been reduced from 30% per annum, which was in the previous provision in the Companies Income Tax Act, to 20%. 20% tax, sorry, not 30% per annum, 30% to 20% on your profit. Right, so it means that instead of paying 30% of your income as tax, you pay 20% now, based on the new on the Finance Act 2020, and then everybody else above that turnover threshold pays the standard tax of 30%, tax rate of 30%. Now, it's also important to note that this provision applies to VAT and withholding taxes as well.
Okay.
This is crucial, yes, because those taxes are some form of advanced income tax collection by government anyway. So as a business owner who runs a business that has a turnover less than 25 million or less than 100 million, well, less than 25 million, you are no longer required to pay withholding tax or to suffer value-added tax on anything that you consume or on services that you render. Now,
so certainly registering your business would go a long way to favor the owners of such small businesses. But definitely I want us to touch quickly on a very, very important issue, which is the ease of doing business in Nigeria. The average businessman would always complain about the cost of transportation, electricity, and so many other factors. Now, 2021, of course, is with the experiences of 2020, you know, people are very, you know, laid back in terms of, you know, trying to give the prospects for 2021 because, you know, COVID-19 came suddenly and a lot of businesses had to re-strategize to ensure that they stay afloat. But at a time like this, especially for 2021, what are the prospects for small businesses in Nigeria?
If there's something that 2020 has taught all of us is a measure of humility to understand that you can have all the best laid out plans. When things happen, they happen. Now, what that also should do is to encourage everybody to have contingency plans. For larger organizations, you will rarely find any corporate organization, you know, that is playing outside of the SME range who will not have some sort of a business continuity plan or the other. Business continuity plans, disaster recovery plans, you know, documents that clearly stipulate what they will do in the event of unexpected situations, if they find themselves in pandemics or if there's an earthquake or if there's a fire. And I think that's the first thing that small businesses need to begin to look at. You know, there's a tendency, because small businesses tend to revolve around the owner. You know, most small businesses technically are almost like alter egos of the owners, of the people that set them up. A lot of times people don't pay attention to these types of things. You just continue to do your business. This year, 2020, has taught us that, look, things can happen. Anything can happen at any time. So you need to have a plan that says, if this happens or if that happens, or in a situation of an unexpected outcome or unexpected event, this is how we are going to survive, both in terms of your operations, in terms of your sales, in terms of your financing and finances, and all of that. How will you survive if an unexpected event comes up? I think COVID-19, that has to be one of the biggest lessons that we take out of the pandemic in 2020. Going into 2021, now, what does that mean? So what's happened this year is that certain types of businesses and certain types of business owners actually made a lot of money. It's surprising. Most people made losses. Most businesses suffered. So a lot of businesses collapsed and went under. But some businesses in the same sector that these businesses operate in actually made money. And in personal conversations with entrepreneurs and business owners, you hear somebody saying, I recall a friend, on a platform somewhere saying, oh, this year has been his best ever. And, that everybody was shocked, like, what? How?
Which is a stark contrast to the testimony, so to say, of
yes,
most people. But quickly, Mr. Soputor, I would like you to touch on what, especially for those who had failed businesses in 2020, for 2021, what can they do to ensure that they stay afloat? In 1 minute.
Okay, so for 2021, the first thing that you need to do is to be flexible. This is absolutely crucial. In other words, don't hang on to your business model and hang on to the business that you do and say it's sink or swim. If you find yourself in a situation where that business is no longer working, be quick to look around you and say, what else can I do? Maybe that is related to what you already do. That's one. Secondly, there is a lot of support and assistance available with government. And I think this is another area that SMEs have failed. So when this happened, a lot of stimulus packages, palliative support programs were put out, even in terms of access to finance. But a lot of people couldn't access them because they were not registered. So a lot of those schemes, you need to have your tax identification number, for example. You need to have a bank account. You need to have a registered name of some sort. A lot of small businesses don't have these things. So organize yourself, structure yourself to a certain degree. You don't have to have all the big structures that the big companies have, but register your business, even if it's a business name, have a bank account, have a TIN, so that you can access formal funding when they become available. So one, be flexible. Be ready to pivot and turn your business if the need arises. Two, organize and register yourself to a certain degree so that you can have access to all of the encouragement and support that the government has put out, the exemptions in the Finance Act that we just spoke about, and all of that. And three, I think the biggest thing for me that I would say to any business owner is just be nimble in your thinking. Be nimble in your thinking. Don't be rigid. Don't be a one-track minded person or a one-track minded business. I think for me, from a strategic point of view, that would be the biggest thing. And then, of course, have a plan, prepare.
Definitely have a plan. Thank you very much, Mr. Soputor. And you rolled out a lot of lessons that I think small businesses will learn from in Nigeria today, because of course things are quite unpredictable these days, and we hope definitely that 2021 will be a good year, not just for small businesses but also for the nation's economy. Thank you very much, Mr. Soputor, for coming on Money Matters.
Pleasure. Thank you for having me.
And that was Segun Soputor talking to us on prospects for MSMEs for 2021. But it's this much we can take on the program at this time. But a big thanks to my guests and viewers. Please join me next time on Money Matters. I am Fola Shadi. Green Day. Bye for now.